head to Nigeria, where the Nigerian commercial banks have ventured into lending cheap loans to small and medium enterprises to help them stand on their right toes. The move was in response to the country's central bank policy that rolled out a conducive loan deposit ratio for the banks in 2019. Details on that in this report.
Perhaps nothing catches the new deal in the Nigerian banking industry than this giant billboard standing on a very strategic point in Lagos. SMEs have suddenly become the darling of commercial banks since the central bank raised their loan-to-deposit ratio to 65% and assigned a weight of 150% in respect to lending to small and medium enterprises, retail and mortgage.
There is currently a lot of credit going to the system. We've also seen a moderation in interest rates, in fact, a crashing of interest rates. Today, we're seeing banks deposit rates in the number of 2.56%. We've also seen a moderation in lending rates.
Among the SMEs who have benefited from the new loan regime is Tuteria, an e-learning startup where Kende Ishie is a finance manager.
Sometime last year, we discovered that as a growing company, the space where we were was a little too small for the number of staff that we had, and we decided, we have to get a bigger space, something more comfortable. So we reached out to our bank account manager and we said, okay, we're aware of this directive from CBN. Can you let us know how we can benefit? And then he got back to us and said, this is the amount that you guys, that your company really can take at this time. And in about a week, our accounts were credited. They just sent us the payment plan and all of that. And it was really little.
Before the new CBN LDR policy, it would have been practically impossible for small startups like Tuteria to get a loan from a bank.
But of course, we know that the SMEs brought a lot of risk to the banking system. And that's why the banks are reluctant to lend to them. But the central bank trying to create incentives to make the banks lend to them. When the figures are out, we will see what additional volume of credit went to the SMEs. But the incentives are there for the banks to lend to the SMEs.
At some point, the central bank contemplated a further increase in the LDR to 70% to further drive more credit into the system and onto the hands of SMEs. But it stayed action on that at the moment, saying it had noticed a remarkable increase in the size of gross credit by deposit money banks to customers.
Should the central bank increase it to 70%, it could have unintended consequences. To the extent that the banks begin to look for very weak credit customers to lend to. And that could lead to an upswing in the number of main loans.
For now, SMEs in the countries are enjoying some breath of fresh air as far as bank loans go. Their chances of securing low-interest loans are at their highest than ever. And like the message on this billboard demonstrates, quite a number of them are rushing to the banks, finding the offering on the table very irresistible.